It's probably principally made in Moscow, but not exclusively made in Moscow in terms of if you decompose UK CPI and why there is a 350 basis points spread between UK headline CPI and G20 average CPI. It's mainly the energy component, and different countries have different reliances.
Our headline CPI hasn't got energy in it.
Headline does. Core doesn't.
Core inflation hasn't got it.
So you look at the spread there.
The core's the one that's going up and that's causing problems.
Yes, but
causing problems.
It is. So we saw a near 30-year high of 7% on the core CPI measure, and that is still probably 250 basis points bigger than the spread. So that's why I say it's partly Moscow story, but there's also, look, let's not kid ourselves, there's a Brexit element to all of this.
You're not allowed to say that.
I know.
The Brexiteers will get annoyed with us.
Hopefully,
by pointing out that there are labour shortages that are induced by the Brexit ramifications and the impossibility of restaurateurs and service sector to get hold of said employees. Well, that's because of Brexit. We're not allowed to say that, Simon.
Maybe
they get annoyed with us. We're all Brexiteers now, apparently.
Maybe they're not awake at this time of the morning.
Oh, they'll be there. They'll be there ranting at me on Twitter.
Keyboard warriors.
Yeah.
Right, well, look, so there is a 4.5% increase in working age inactivity since the Brexit transition, where all other G7 countries, with perhaps the exception of the US, have seen inactivity falling. So we do look like an outlier in terms of impairments to the supply side of the economy, which is driving core inflation higher. But, Mr. Sunak has a narrative there as well, which is fair, which is global factors. The UK is disproportionately impacted by the gas price because it's a large part of the heating bill, but also the swing supply for electricity. And that has driven up the CPI component headline, you're right, by 120% compared to about 40% in mainland Europe.
So, Simon, if we've got these anomalies that are causing inflation to spike this time from Moscow to Brexit, should we bring out the big blunt instrument, namely monetary policy, to get the job done?
I think we've learnt in the last 4 or 5 weeks, really since the last core inflation print, the two things matter in the UK context: data and credibility. Data matters, and there's a lot of cynicism when central bankers say, look, we're data dependent. But there is no doubt that the behavioural decisions that the Bank of England has to make today have been driven by the data. Second point, credibility, and this comes back to the bluntishness of the tool. Because actually you could have a situation right now, if the Bank of England had unimpeachable credibility, where they would say, right, we have this blunt interest rate tool which takes 18 months to 2 years to transmit through to the economy. Therefore, it could take the Powell path. You saw the testimony at the bottom of the hour about him talking about the full pass-through of the monetary tightening done thus far. If you've lost your credibility, though, it's very difficult to move away from that blunt tool because your broader guidance to the marketplace to let this tightening play out doesn't get the sort of the impact on financial conditions that you're looking for.
Right, so inflation expectations are what counts when it comes to central banks as well.
Yes.
You talk about an 18-month lag effect. If that is the case and you've got an inflation problem today, don't you just go hard? 50 basis points, serve up the very strong rate hike today rather than just filtering across a series of more rate hikes that are going to take even longer to catch up down the track?
Well, we've had 440 basis points of hikes thus far in the UK, and the UK doesn't look a big outlier in the context of other major economies in that. So adding another 50 basis points, which will take 2 years to transmit, given the different environment we will face economically in 2 years' time, given that inflation expectations on a survey-based measure are coming down, the mortgage market impact we calculate is only about a quarter of its full impact in terms of its pass-through to the refinancing cycle. And then if you look at spot prices in energy, in food, they do indicate that inflation should come down, but it comes to the point where you can move away from your blunt tool if ultimately, and this comes down to Andrew Bailey and his leadership, whether the markets are prepared to take it on trust that he has a careful hand on the tiller.